Well, happy Monday. It's December 18th. We're just 1 week from Christmas. So I want to bring you the latest data here in the Austin metro area as we wrap up the year. The big story that we've seen over the last month or two has been the decline in interest rates. Right now on this Monday, the 30-year fixed is sitting right around 6.6%. To put that into perspective, look at this chart down here. Sticking the landing after a huge weekly drop last week. So we're continuing to see really strong slide in the rate. So if we look at the 30-year fixed rate mortgage rate, this is for the entire year. So back in the spring, we were in the low sixes. We had the Silicon Valley kind of climbing before that. It collapsed. But since that moment, it ran all the way up the whole year, just from mid-spring all the way up until October. We touched 8%. And if you went back and looked at the videos at that time, the whole chart was going up. And so we were trying to predict where we were going to start the year. We might have started the year at 8% or higher, at that time. But what's happened is the Federal Reserve has kind of more strongly vocalized that more likely than not, they're not raising rates again. More likely than not, they may have some cuts next year. That allowed the bond market, the stock market investors, and everybody to say, hey, inflation, we're getting a handle of it, and the high interest rates are over. That has sent mortgage rates spiraling down at least 1.5 points since that mid-October timeframe, and you can really see it on this second half of the chart. The question is, was this the peak? And are we now on the backside of that mountain climb? It's still a little too early to tell. I'm feeling more confident we won't see upper sevens again. I do think there's a chance we could touch 7 again, so pay attention to that. But if we head into the spring, and we have lowering mortgage rates as a tailwind after 18 months of price decline as a tailwind, that's a recipe for a lot more buyer activity in the spring. I think we'll have more sellers as well. So more supply and more demand as we head into spring 2024. Pay attention to that. All right, I want to take you over here. We're going to look at these stats right here. This is November stats. This is out of the Austin Board of Realtors, just to give you a flavor for what has happened this year, especially November compared to November last year. So the MSA is the total metro area. Our median sales price now is about $424,000. At the peak of the pandemic, it was $550,000. So we've come down $125,000. But from November last year, we were already on a pretty steep decline last year. We're still down about 8%. For the total metro area, but it's not equal across all areas. I'll show that to you here in a second. Days on market, we're sitting about 2.5 months. Listings have been up in November, but pending sales were also up almost 10%. I think a lot of that is new construction, and I'll show you why. Months of inventory below 4 months, so still an okay market in terms of supply and demand, but it's just been very sluggish, and the main reason is those mortgage rates. Let's look at Bastrop County. So Bastrop is to the east of Austin. It's a little more rural, although the city of Bastrop probably has about 50,000 people. Median sales price, $346,000. Not down as hard, about 3%, but days on market, way up. There's just not as many people out there. It takes longer to get the buyers in the door, but pending sales up about 24%. Again, I think that's because they have a little more new construction out there. Their months of inventory are higher because it's taking longer to sell, so about 4.7 months. Caldwell County is our least populated. Lockhart's the biggest city that would feed to Austin. There's a lot of new construction down there. Median sales price is about $313,000. Their days on market have gone up a little bit, not terrible, but their closed sales are way up. Closed sales, so they probably front loaded some of November. Some of the October sales went a little faster because their pendings were down. But if you weigh those out, I think they've done okay. And their months of inventory about 4.3 months. This is city of Austin, up 1%, not a lot. Let's call it flat, but the median sales price is hanging in there. There are not nearly as many new construction properties in Austin. And more importantly, I think the affluence, the money in Austin kind of maybe holds it up a little bit. And you're also going to have sellers less likely to sell. They'll just take their house off the market and wait till next year. They have a lot of equity. And so what we're seeing is the median sales price kind of hung in there for the city. But days on market, we're still sitting around 2 months. Pending sales, not down that much. Listings still up 14%. But the months of inventory a little below 4 months. Here's Hayes County. This is the one I thought was most surprising. So the median sales price, just under $369,000, but they're down 10% over last year. A lot of closed sales, a lot of pending sales. So they're rocking. Why? Ton of new construction. So between Kyle and San Marcos specifically, and Buda to a lesser extent, man, there's a lot of new construction down there. And so days on market are way up, but lots of sales. But my guess is they're at a lower price point. They're building a lot of those starter home inventory. I looked at some properties last month in San Marcos. We were getting brand new construction, 3-bed, 2-bath, right around 300,000, and that was before incentives. And so, there's a lot of stuff down there that they can push to absorb, kind of help with affordability. But the downside of that is it's bringing that median sales price down. So I think what's happening is you have a flood of new builds at a lower price, and that's bringing that median sales price down. Travis County, which is almost Austin, although it's Austin plus Pflugerville plus Lago and a few other smaller suburbs, but their median sales price, again, kind of hanging in there. 70 days on market, 3.9 months of inventory. It's kind of trending very close to Austin. Finally, here's Williamson County. This is your big northern suburbs: Round Rock, Cedar Park, Leander, Georgetown. So median sales price, 416,000, down a little bit. They have a lot of new construction up there as well. So pending sales, but their days on market about 2.5 months. Listings about equal, but they're the lowest months of inventory. They're selling a little faster up there at around 3 months. So that gives you a look at the metro through November. The stats may wiggle a little bit as we finish out the year. I will likely share those with you in early January. So I want to take you back to this chart. This is going to be rental comps. So if you are renting single families or duplexes in the market, this is some of the latest stats. Treaty Oak Properties put this together, so thank you to them. So this is looking again November over November. So the single family rentals is the top box, duplexes is the bottom box. So in terms of single family rentals, we've seen 10% more leasing activity than last year. But the actual price, they call it sold price, but just think the price that people are leasing the property for, it's down about 2% from last year. Not incredibly different, but still a little softening in the single family market because there's been more supply. And the reason there's been more supply, it doesn't say it here on November, but if you went back through the summer, you had so many sellers, they couldn't sell their property. They're pushing more single family homes into the market, and that created more supply. It's just kind of softened the market. On top of that, the bigger supply is in multifamily. That's where we've been building tons of new apartment complexes. They're all empty when you build them. And so what happens is I think we had to absorb around 23,000 units this year on top of all the rental supply that already existed. So 23,000 more people had to sign a lease this year just to fill up all these new apartments. And I think that's affecting duplexes a little more. They're down about 5%. So even though they've had 20% more leasing activity, it's not a demand problem. The demand is still here for renting. It's not a demand problem. It's been a supply issue. I personally think that's a shorter term issue because I think after, with all the interest rates climbing, the developers building new stuff have been not interested to build a lot more multifamily. So maybe for the next year or two, we're going to have higher supply, but maybe in 2025, 26, 27, I wouldn't be surprised if the storyline changes and it's all of a sudden we don't have enough because the demand is still here. All right, I'm going to bring you back over here. I want to show you the historical sales price trend. So this is looking at the last 2 years. This is price on homes for sale and what they've closed for. If I go back to the very beginning of 2021, our median sales price was below 400,000. And you can see where it went. Took off like a rocket in the spring. We softened a little bit in the second half of the summer. And then inventory disappeared again. And we took off like a rocket through, again, the spring of 2022. From then, the interest rates went up. We had this huge fall. But again, here's the spring of 2023. This year, the price went up. And then, of course, you get to the second half of the year and it comes down. We're sitting right now about 419,000 at this exact moment in the metro. So we're still about 400,000. But if you think of this as a roller coaster during the pandemic, I mean, it was a price roller coaster. We rocketed up, we rocketed down, but there's little data. Look what happens in the spring, price goes up, falls in the fall, up in the spring, falls in the fall. Up in the spring, falls in the fall. You get the pattern? So which market are we about to head into? We're about to head into the spring. So I'm going to say with more demand, and now lower home prices, and now lower mortgage rates, okay, compared to what people thought we were going to have, I think we're starting to see some tailwind that will boost the market next year. There's still a lot of things that can happen. We could have a recession. We could have more companies have job layoffs. That will offset some of that traction. But I can tell you right now, I don't think we're going to have a pandemic explosion. I just think we're probably bottoming out on this market, if I could make that prediction. And I wouldn't be surprised if the spring has a nice little bounce. I want to share this with you, and here's one last reason why. The city demographer just presented this to the city council and some business executives last week. Our metro is still the fastest growing in the US for the 12th year in a row. So hey, whatever the headlines you've read in the housing market and the interest rates and all the negativity, Austin is still growing, and we are still growing fast. And so all these people, by the way, remember I mentioned all that rental demand, that 10, 12, 14% of rental demand are people that didn't buy a house. So they weren't buyers, they just switched over to being renters. Okay, so they're coming into the market, they're renting. They just got lucky because we have a ton of supply. And so it didn't end up creating this big boom in rents. But at some point, that's going to catch up. It's either going to catch up in for sales, or it's going to catch up in rents, or it's going to catch up to both at some point. If I scroll down to the bottom, here's a few more headlines. Austin, again, ranked top college town in America. That's more of a cultural thing with the University of Texas, not as much about population. Millennials are flocking to Austin. Again, I've said this from the beginning, watch the demographic data. At some point, it is inevitable. You can't fight it. When more people move to the market, they need housing. When they need housing, it's a supply and demand game. The high interest rates pushed a lot of people out of the market for the last 18 months. And I don't disagree. It was too expensive. It was so expensive to buy a house. Property taxes went up. Homeowners insurance went up. The prices went up. But what's happened is the buyers spoke and said, nope, we're not buying at that price. The sellers have had to capitulate. The market has come down. I think we are now starting to get the market more in line with longer term appreciation trends. On top of that, rates are coming down, the price has come down, and the demand is still in the market. That tells me there's a little recipe, a little cocktail there for a decent spring. If you want to follow all of our videos, please check out our YouTube channel. You can look at Ryan Kelly Group on YouTube. You can see all of our weekly videos there. I'm not sure if I'll have one next week because next Monday is Christmas. So I definitely will not be on my computer. If I can get one out midweek, I will. But until then, if you know anybody buying, selling, or looking to invest in Austin, hey, I'm still at work. Would love the chance to talk with them. And if not, you guys enjoy a Merry Christmas and look forward to talking with you again soon. Thanks.